A very good afternoon. Good afternoon to everyone who is tuning into my channel at this time. Today is the 7th of September, and it is 12 noon that I'm broadcasting, making this broadcast for today. We are all in the community of the billion coin, and the billion coin has been now on for about 2.5 years. And during this time, we have seen that there are a lot of interest that has been generated in the market space, and we are seeing that there has now become a daily occurrence of cryptocurrencies being presented in the coin market. While we are talking about the introduction of new coins that are in the market, uh, we are flooded with thousands of new crypto coins, and we do not know exactly uh, which are the ones that are good and which are the ones that would give us good returns. As in the open market, in the coin market, many of these coins are actually uh, being manipulated to a certain extent by some of the global financial elites. In fact, many are already controlled and hijacked by the financial bankers, and they are now turning their attention from fiat currencies towards cryptocurrency. So cryptocurrency comparatively is a new phenomenon that has entered into the market over the last 10, 20 years. And a lot of people who are new to this still do not have a full understanding of what cryptocurrency is and its value. So this morning or this afternoon, I would just like to spend the next half hour or so in trying to understand or give us a clearer picture of what is cryptocurrency and what is the future of cryptocurrency in today's world. Now we know that the fiat currency that is going around in the world today are controlled by central banks. And without you knowing, in fact, all the central banks are being manipulated and controlled by the global financial bankers. Uh, the Federal Reserve in America has a lot of say in what happens in America, and also indirectly, it sets the trend for the rest of the. And the interesting thing is that the Federal uh, Bank in America is actually not a bank. It is only a group of financial bankers who are making the call, who are deciding the direction that the financial market goes. And they have got enormous powers, and they are the one who makes or break the currency or even the finances of a nation. We have seen that in recent times, there are many countries that are already reeling in the financial collapse. Previously, in the last few years, we have seen Greece, Portugal, and Spain, uh, and where the currency have really collapsed, and it has affected the European Union as a whole. And nearer to America, Venezuela today is suffering from great depreciation of their currency, and it takes trillions of dollars of their currency to buy even a single loaf of bread. And this has caused hardship to its people, and many are running away to seek employment and to seek financial uh, relief in more developed countries. Also in Zimbabwe, the same thing has happened. The people are now also in deep financial difficulties, and the local people are being challenged by it. So, in the face of all these uncertainties, some of the intelligent people who are uh, with foresight, they have come up and invented or created a cryptocurrency or digital currency. And so, what is this that we are looking at today? Let's look at it from the very beginning. A cryptocurrency is a digital currency. It is not in paper form, it is not solid, but it is a digital form. And this is created and managed through the use of advanced encryption technique known as cryptography. So this is all computer skill, computer tools, computer generated. It is not physically printed like the fiat currencies, or it is not physically minted like the coins. Cryptocurrency made the leap from being an academic concept. That means to say it was just originally an idea, and it became a reality with the creation of Bitcoin in the year 2009. Now, while Bitcoin, when it first came out, attracted a growing following in subsequent years, it captured significant investor and media attention in April 2013 when it peaked at a record of $266 per coin after surging 10 times in the preceding 2 months. So at the beginning of 2012, the Bitcoin was only worth around $20. But within a period of 2 months, in March and April, the value of Bitcoin surged and jumped 10 times to $266 per coin. So subsequently, Bitcoin spotted a market value of over $2 billion at its peak. But when there was a pullback, a 50% plunge happened, and it sparked a raging debate about the future of cryptocurrencies in general and Bitcoin in particular. Why has this happened? It was because the Bitcoin was the Bitcoin market was overheated, and everybody was jumping into the bandwagon and capitalizing on it. They were chasing the Bitcoin, which went up to nearly $20,000 per coin. So while this was happening, many of the financial bankers, they also jumped into it, and they were the one who purposely drove the price down so that they can collect and keep for future expand, uh, expansion as well. So the question now is in the currency market, in the financial market, will these alternative currencies eventually overtake the conventional currencies? And would they become on par with dollars and euros someday? Or are the cryptocurrencies just only a passing flash in the pan or a passing fad that will die out before long? So the answer to this big question lies with Bitcoin. Bitcoin is the leader. Bitcoin was the originator of cryptocurrencies, and how they would perform will also determine on the future state of digital currency. So let us take a closer look at Bitcoin. It is now the current standard against which all other digital currencies are compared or measured. Bitcoin is just like the US dollar, which is where the world currency are measured and based and paired with. So Bitcoin is a decentralized currency that uses peer-to-peer technology. What this means is Bitcoin does not belong to any central government. It is not located in any single one country, but it is distributed worldwide. It has no uh, designated location, as it were. It is not controlled by any central bank in the world. It is not controlled by any particular country. It is not controlled by any particular individual. But it is decentralized. It is spread out throughout the whole world, and it is being applied and it is being utilized on a daily basis to transact all kinds of transactions, from services to properties, on a peer-to-peer basis. So this actually is used as par to as compared to fiat currency. They are in lieu of physical currency, and it is interchangeable. Bitcoin can be changed into any national currency, and any national currencies can also buy Bitcoin, which becomes a neutral and a decentralized currency. So the transaction of Bitcoin, it is verified and carried out collectively by a blockchain, which is the network that controls the processing of the transaction. That means every transaction is global and it is trans-border, and there is no border that limits it, unless, of course, there are some countries that does not permit transaction of Bitcoin within their own nation. Now, while this decentralization enables Bitcoin to be free from government manipulation or interference, the downside is that there is no central authority to ensure that things run smoothly or to back the value of Bitcoin. So in other words, there is no uh, guideline, there is no perimeter whereby use of Bitcoin is regulated. So Bitcoins can be used for multiple purposes, and they are created digitally through a mining process that requires powerful computers to solve complex algorithms and to crunch the numbers. So it is an artificial currency. It is a digital currency that can be created and that can be mined through computers. So they are currently created at a rate of 25 bitcoins every 10 minutes. And this will be kept at 21 million coins, a level that is expected to be reached by the year 2140. So basically, the mining of Bitcoin can run for over another 100 years, and it will definitely run for another 100 years. So there is a big prospect for people who have this uh, technology and this skill and intelligence to do the mining. Now, these characteristics of mining make Bitcoin fundamentally different from a fiat currency, which is backed by the full faith and credit of its government. Uh, Every fiat currency is issued by its own government. Every fiat currency is supposed to be backed by back for its value by the government. But Bitcoin is not. Bitcoin is something that you can generate and mine for yourself. Right? Fiat currency issuance is a highly centralized activity supervised by a nation's central bank. So the central bank would have its backing or its fiat currency or its policy. If there is a absence of any form of gold backing or metal backing, then it will be backed by a government guarantee. In the case of currencies, the central bank will regulate the amount of currencies to be issued in accordance with its monetary policy's objective. So there is theoretically no upper limit to the amount of such currency issuance. In addition, local currency deposits are generally insured against bank failure by a government body. So, which is why in every currency note worldwide, it will be stated that this note is guaranteed by the government for a value of so much face value that is printed on the currency. So, in other words, if it is a $10 bill, it will be treated as a $10 bill. But how much a $10 bill can buy, that depends again on the value of the amount. But nevertheless, whatever face value is printed is guaranteed by the issuing government. However, Bitcoin, on the other hand, has no such support mechanism. The value of the Bitcoin is wholly dependent on what investors are willing to pay for it at the point of time. So Bitcoin is a free moving currency. Okay, as well, if a Bitcoin exchange falls up, clients with Bitcoin balance have no recourse to get them back. So in other words, Bitcoins can be lost. Bitcoin can lose its value, and if it is put in a wallet and the wallet disappear or close down, or if it is parked in a program where they have the wallets uh, given to us, the program can wind up and all the coins can disappear. So is there a recourse to this? Yes, there is. We can have increasing security. We can keep our coins separately. So Bitcoin's main benefit of decentralization and transaction anonymity have also made it a favored currency for a host of illegal activities, including money laundering, drug peddling, smuggling, and weapon procurement. So now in most countries, there is this currency flow uh, control, just like, uh, let's say, in any country, they would have a limit of the amount of cash that you can bring in or you can pick up. But in Bitcoin, we can purchase Bitcoin over the internet with unlimited quantity, and we can move this without even the bank knowing. We can move this even without the government knowing. And so this is becoming a, a, a sort of a favorite tool for drug smuggling, for the terrorist activities where they buy weapons not using the dollars or the euro, but they use Bitcoin to transact in purchasing sophisticated weapons. Now, this has attracted the attention of governmental regulatory and other agencies, such as the Financial Crime Enforcement Network, in short, or abbreviated as FinCEN, and the Security Exchange Commission, which is the exchange in the local um, and even the FBI and the Department of Homeland Security. So the government institutions recognize the power of Bitcoin, and they also recognize the danger of illegal activities using Bitcoins as the tools to move a large amount of currency. So in March of 2013, FinCEN, which is the Financial Crime Enforcement Network, issued rules that define virtual currency exchange and administrators as money service business, bringing them under the ambit of government regulation. So FinCEN in 2013 has introduced this regulation that digital currency now comes under the governance of government regulation. And in May of 2013, the Department of Homeland Security froze an account of Mt. Gox, the largest Bitcoin exchange that was held at Wells Fargo, accusing that it broke anti-money laundering laws. And in August 2013, the New York Department of Financial Services issued subpoenas to 22 emerging payment companies, many of which handle Bitcoin, asking about their measures to prevent money laundering and to ensure consumer protection. So these are actually the companies that do exchange. They buy and they sell digital currencies. And these were being uh, charged with the government of New York or of US, particularly the Department of Financial Services, to show cause for their activities being blackballed. Okay. Now, what are the alternatives to just this Bitcoin? We know that this is all about digital currencies. Bitcoin is the leader, and Bitcoin is only one of the digital currency. What other alternatives are there in the market? So, despite its recent problems or hiccups, Bitcoin's success and growing visibility since its launch has resulted in a number of companies also following suit, and they have also now unveiled and introduced to the public alternative currencies such as Litecoin. Litecoin is regarded as Bitcoin's leading competitor at this point of time. It is designed for processing smaller transactions faster. It was founded, it was launched as an ICO in October 2011 as a coin that is second to Bitcoin, according to the founder Charles Lee. Unlike the heavy computer horsepower required for Bitcoin mining, Litecoin can be mined by a normal desktop computer. Litecoin maximum limit is 84 million, 4 times Bitcoin's 21 million limit, and it has a transaction processing time of about 2.5 minutes, about one-fourth that of Bitcoin. So it is an easier coin to mine, and it has 4 times the total number of coins to be mined. And so therefore, it will be another 100 years or more before Litecoin can finish mining. There is another coin which is called Ripple. Ripple was launched by OpenCoin, a company founded by technology entrepreneur Chris Larsen in the year 2012. Just like Bitcoin, Ripple is both a currency and a payment system. The currency component is XRP, which has a mathematical formula or mathematical foundation like Bitcoin. And the payment mechanism enables the transfer of funds in any currency to any other user on the Ripple network within seconds, uh, as compared to Bitcoin transaction, which can take as long as 10 minutes or more to confirm. Personally, we have experienced a lot of bottlenecks in Bitcoin transaction, and sometimes it even took more than 2 weeks to transfer. Another coin is the mini chip. Unlike most cryptocurrencies, mini chip is actually the creation of a government institution, specifically the Royal Canadian Mint. Now, Mint chip, interestingly, was created by the Royal Canadian Mint. Mint chip is a smart card that holds electronic value and can transfer it securely from one chip to another. Just like Bitcoin, Mint chip does not need personal identification. And unlike Bitcoin, it is backed by a physical currency, the Canadian dollar. So Mint chip is backed by the government. It is also backed by the Canadian dollar. So having looked at some of the popular digital currencies that are available in the market today, let us consider the future of the digital market. Some of the limitations that cryptocurrencies presently face, such as the fact that one digital fortune can be erased by a computer crash. In other words, the danger of holding cryptocurrencies can be subjected to the stability of the program, the computer program that is hosting it. If that program crashes, as we have seen happen several times before, or if the watch or that program is hacked by a hacker and all the currency stolen or ransacked by the hacker, so it can be a total loss for those of us who hold those currencies. So hopefully, with technological advance, this can be overcome over time. So what is more difficult to overcome is that the more popular the currencies are, the more popular the cryptocurrencies are, the more regulation and government security they are likely to attract, which erodes the fundamental premise for their existence, against the fundamental uh, premise or the fundamental uh, plans of the digital currency. So as we see, more and more regional governments are now trying to control the flow and the usage of digital currency within the national borders. While the number of merchants who accept cryptocurrency has steadily increased, these are still very much in the minority. For cryptocurrencies to become more widely used, they have first to gain widespread acceptance among consumers. In other words, consumers must be ready to accept and to use this digital currency. It is just like any other fiat currency. If the fiat currency has no value or very little value, most consumers would not want to accept and they would not want to utilize the currency. So it is the same with digital currency. There must be an acceptance by the people who are holding it and who are willing to, to trust in it. So, so we understand that because of this concept of digital currency, many of the people who are less technological uh, knowledgeable, who are less IT knowledgeable, they would not like to put their hands into this, except for those who are technologically adept and technologically skilled. So a cryptocurrency that aspires to become part of the mainstream financial system may have to satisfy widely uh, divergent criteria. By this, it means it would need to be mathematically complex to avoid fraud and hackers attack, but easy for consumer to understand. So it must be strong, it must be safe, and it is also user friendly. And decentralized, but with an adequate consumer safeguards and protection, and preserve user anonymity without being a conduit of tax evasion, money laundering, and other illegal activities. Since these are difficult criteria to satisfy, the question we want to ask is it possible that the most popular currency in a few years' time could have attributes that fall in between heavily regulated fiat currencies and today's cryptocurrencies? So there is a balance that needs to be struck. Is cryptocurrency designed to be safe? Is cryptocurrency designed to be user-friendly? Is cryptocurrency designed to be a safe conduit of honest transaction that would protect the currency from being used or utilized by illegal activities or illegal transactions like drug trafficking, terrorism, and whatnot? So, what are the possibilities that is possible? What are the possibilities now that can satisfy all these conditions? Now, we have seen Bitcoin's success in dealing with the challenges it faces, and they are setting the standard, they are setting the way for other cryptocurrencies to follow. Their success in making Bitcoin accessible to one and all, and to make Bitcoin a safe digital currency to operate in would also pave the way for other cryptocurrencies to similarly be accepted and broadly utilized in the world. So we have already looked at what cryptocurrencies are and what are the challenges that it faces and what are the opportunities that it offers. So the question now you would like to know is, should you invest in cryptocurrencies? So if you are considering investing in cryptocurrencies, it may be best to treat your investment in the same way that you would treat any other highly speculative venture. In other words, recognize that you run the risk of losing most of your investment, if not all of it. As stated earlier, a cryptocurrency has no intrinsic value apart from what a buyer is willing to pay for it at the point of time. That's right, there is no definite value except that it is a willing buyer, willing seller uh, kind of value, and you must be ready to accept that value that it holds at that point of time. This makes it very skeptical to huge price swing. Yes, it can go up and it can come down very smooth, very swiftly, which in turn increases the risk of loss for an investor. For example, the price can fluctuate between 10 to 20% in just 15 minutes, right? Bitcoin, for example, plunged from $260 to about $130 within a 6-hour period on April 11, 2013. So it can lose 50% of its value in just a few hours. If you cannot stomach that kind of volatility, do not invest in digital currency. While opinion continue to be deeply divided about the merits of Bitcoin as an investment, supporters point to its limited supply and growing usage as value drivers, while detractors see it as just another speculative bubble. This is one debate that the conservative investors would do well to avoid. So if you are not ready to take risks, keep away from digital currencies. What is the conclusion after all this discussion? The emergence of Bitcoin has sparked a debate about its future and that of other digital currencies. Despite Bitcoin's recent issues, its success since its 2009 launch has inspired the creation of alternative cryptocurrencies such as Litecoin, Ripples, and Mint, and thousands more that are following and are coming out as ICO on a weekly basis. A cryptocurrency that aspires to become part of the mainstream financial system would have to satisfy very divergent criteria. While that possibility looks remote, there is little doubt that Bitcoin's success or failure in dealing with the challenges it faces may determine the future of other cryptocurrencies in the years ahead. In other words, whether Bitcoin succeed or fail would become the benchmark that other digital currencies would be measured against in the years ahead. However, with the original concept of Bitcoin being free from governmental interference, it is quite unfortunate that the financial elites has hijacked the public blockchain technology of Bitcoin. It is very important to note that investing in the public blockchain technology will definitely make you lose a lot of money on the short run. It's like buying a car that will depreciate over time without adding value as a fixed deposit does to an investor. We must note that there are differences between private and public blockchain investment. Public or market-based coin cannot profit a merchant, but a private blockchain coin will profit merchant due to its stability in value. Example, like the billion coin. Now, the public market-based cryptocurrencies are controlled by the elites, but currencies like the Bitcoin, like the billion coin, are controlled by the people. Public currencies are full of speculations as prices are full of volatility, whereas private cryptocurrencies like the billion coin have no business with volatility as prices are pegged with single registration of living men and women. So it is very obvious that the best cryptocurrency with the value of a fixed assets are private blockchain technology, and it is worth investing as it possesses the true storage of money. So our opinion is that if you are to invest in the billion coin today, it will surely secure your generation from hardship because every billion coin is designed and valued at €1 billion upon its maturity. And to make it more interesting is that the admin of the billion coin are now working on a QR code to be integrated in the Kringles currency wallet. In other words, every member of the PBC community in our PBC wallet now admin is working towards incorporating the QR code. What does the QR code enable for us? The Billion coin is one of the many cryptocurrency which uses a private blockchain network. It is also the fastest growing digital money accepted by the people worldwide because it is the currency of the people, by the people, and for the people. The Bitcoin, the Billion coin is designed to end poverty globally by making its currency to be stable in value and better to be accepted by merchants worldwide. Yes, we are seeing international stores sprouting up all over the world, in US, in Asia, in Africa, in India, everywhere we are seeing more and more of these merchants of international standing sprouting and advertising that they are accepting transaction using the Billion coin. Now, to make Kringle currency or the PTC, the Billion coin, easy to the world and also easy to use in making transaction fast, a QR code will be integrated into the PBC009.net wallet so that mobile Android users and other devices linked with the Android technology will be able to use it safely to make payment everywhere, just like point of sales, which serves in payment while using a debit card or a credit card for payment. So it is just like the the QR codes that we are already using on our mobile phone in the supermarket, in the petrol station, and in the, even when we buy uh, airline tickets and so on. So this is going to be a big welcome development in the TBC community, and it is going to be a big bonus for all of us. So if you are not yet a member of the TBC community, this is a time for you to consider coming on board with us in the TBC community. And if you are interested and you want to become a member, you just scroll down to the bottom of this broadcast and you will see the link for you to join the TBC community. And I have my email down there, and I have my phone number down there. And if you want to uh, know more about the TBC or the Billion coin, just drop me a line and I'll be most happy to help you. And if there's anyone out there who wants to buy the TBC, I'm also a trusted seller and I will be happy to help you out in your need to acquire any of the TBC coins, or if you want to add on and increase your holding of the TBC coins. But it has been a pleasure to speak to you this afternoon, and I hope that whatever that I brought to you would have been of value and you have learned something out of it. Thank you for attending my broadcast, and I will look forward to talking to you again tomorrow. And this is John signing out once again. Bye bye. I will see you again tomorrow.